standing by. At this time, all participants will be on a listen-only mode until the question-and-answer session of today's call. At that time, to ask a question, please press star 1 on your touch-tone phone and record your name at the prompt. This call is being recorded. If you have any objections, you may disconnect at this time. At any time during the call, if you need net assistance, please press star 0. I would now like to turn this call over to Mr. Hector Maldonado, U.S. Department of Commerce. Sir, you may begin.
Good afternoon, everyone. On behalf of the U.S. Department of Commerce, I want to welcome everyone to today's webinar. As our host stated, my name is Hector Maldonado, and I work for the Trade Information Center. This webinar that we're having today is part of the Basic Guide to Exporting, and the webinar is Financing Your Exports and Getting Paid. This afternoon, we're lucky to have 3 great speakers. We're going to have Gus Grace from the Export-Import Bank, Richard Ginsberg from the Small Business Administration, and Valerie Varga from SunTrust. I want also to remind everyone the context upon which we're doing this Basic Guide to Exporting, and it's under the National Export Initiative, in which the President has set a goal for the United States to double exports over the next 5 years. So this is the educational outreach to help exporters become more knowledgeable about export topics. You can always come to our website, which is export.gov, and look up information about either archived webinars or upcoming webinars on trade education topics. Today's agenda, as I had mentioned a little bit earlier, after this brief introduction, we're going to have representatives from the 2 trade finance or the 2 U.S. government agencies that have trade finance programs. It will be Gus Grace from the Export-Import Bank, Richard Ginsberg from the Small Business Administration, and Ms. Valerie Varga from SunTrust will give us a perspective from a private sector financial institution and how these institutions interact with the government programs. We will also have a question and answer period available at the end of these presentations. Also want to make a reminder for all of you that May is World Trade Month, and I want to invite everyone to come to our website at export.gov and see some of the events that are being held with the World Trade Month and some of the messages from the leadership at Commerce regarding World Trade Month and the activities that are taking place during this month. Finally, again, I want to remind all of the participants that the Trade Information Center, that our phone number is 1-800-USA-TRADE, or by its numbers will be 1-800-872-8723. We are a resource to you. We're an inbound call center to help answer and direct you with any other questions that you may have related to exporting. And again, our website is export.gov. Now, without any further ado, I would like to welcome Mr. Gus Grace, and he will talk to us from the perspective of the Export-Import Bank. Gus?
Thank you, Hector, and welcome to those of you who have decided to join us today. Let me begin right away. We have a lot of information to cover in a very short period of time. Export-Import Bank is, of course, the official export credit agency of the United States government, and we've been around since 1934. It's important to know that our mission is clear. We're here to support and sustain jobs here in the United States. We're a self-sustaining agency. In other words, we return funds to the Treasury. We've returned close to $3.5 billion in the last 5 years. So that's important in terms of our reauthorizations. This past year, 2010, we've authorized $24.5 billion in export financing primarily to small businesses. We're here to supplement the financing of commercial banks. We don't compete with the U.S. banks. We like to provide guarantees so that they can stay in the business of exporting, and we're providing transactions so that we can minimize the risk for the exporters. Our competition are the other ECAs, export credit agencies, Hermes in Germany, COFAS in France, EDC in Canada. That's who we compete with because each country is interested in financing exports from their country. We're the agency that looks over our exporters, and let's be clear, our customers are the exporters, and we want to make sure they get the financing so that they can compete on a global basis. Our business is small business. Congress has mandated that 20% of our authorization should be directly for small businesses, and we've been pretty good at making these numbers meet. We've increased our small business activity to $5 billion this past year. That's an increase of 12%. We have 22% increase in authorizations, and it also happens to be the percentage of total business that we're doing for small businesses. And all the transactions, 85% of the transactions are really small, the $100,000, the $50,000, and the $200,000 transactions. There's no transactions too small or too large. We will finance $5,000, $10,000 exports under the insurance program, and we also do project financing and million-dollar satellite and aircraft financings as well. So we're across the board. There's no maximum or limit in terms of what we can do. What we like to do is just try to have the exporter take the fear out of this financing and entering into new markets, and we try to answer the questions of when and how I'll get paid. We take the credit risk, and we want the exporter to manufacture his product and export. And we want to make sure that they can export to a market and different products to that market and eventually export to other markets. So we're kind of here to answer the questions. And once you've got a big sale, we're going to help you obtain financing in markets in which we are open. Let's see, we're across the board. We're financing all kinds of industries, services, and it's easy to talk about a tractor or a piece of capital equipment, but we finance the exportation of goods as well as services, engineering services, feasibility studies, and things like this. Renewable energy is important to us. We're financing windmills and hydroelectric plants and power generating plants and oil and mining, and all of the small activities and suppliers that go into these particular industries, constructions and medical equipment. All of these industries are important to us, and a special initiative for the medical industry. We will go an extra mile for financing the exportation of hospital beds and equipment and examination and x-ray machines and the like. So if there's an export of either goods or service, we'll find a way to do that. We're open in over 155 countries. The primary markets that we're looking at for focal points are Brazil. Colombia, we've learned today, is probably going to be leading one of the markets that we're lending to, one of the highest countries in which we have authorizations as a result of working with some of the oil companies there. India is a good market for us. Mexico has traditionally been our market due to the close proximity, but you can see that we're in over these 9 key markets for us, but we'll finance exports to any country in which we are open. Now, if you're an exporter and you have a problem, you need funds in order to manufacture or to fulfill your order, we've got the working capital guarantee. You go to a bank and we're going to provide a guarantee to the bank. The bank will provide you with a line of credit for working capital in order to fulfill your export needs and to help you manufacture. Now, we can't finance the domestic transactions, but we have to be able to finance and see where a manufactured good or service is going to be exported. That's important to us. If you need extension of credit, you, as an exporter, want to provide terms to your buyer. We have a export credit insurance policy that we'll give you that will insure that receivable. You provide terms, you're providing a receivable. We'll take that receivable and insure it, and you can walk into most banks and have that discounted to put yourself back in funds. It's a way of generating cash flow and credit. Buyer financing. Most of the time transactions go forward if the buyer has a adequate financing vehicle. And for your buyers, we're able to provide either a guarantee to the bank to make the loan, we will provide a direct loan ourselves, or we have a medium-term insurance policy that provides financing for the bank or the buyer. Okay? The guarantee is generally for support of raw material, labor, and it's a 90% guarantee that we give to the bank to encourage them to lend money to the exporter. No maximum minimums. We could do a specific transaction. We do, however, like to provide lines of credit so that the exporter will have funds available when and if they need them. The working capital guarantee program is generally fully supported by inventory and by receivables. It's generally going to be for a one-year period of time. We generally will ask for a personal guarantee of the owners. And then this year we're coming up with something new that we're calling supply chain financing, in which we're trying to tap into all of the suppliers of major exporters. These would be the General Electrics, the Boeings, the large exporters that have suppliers that rely very heavily on financing in order to meet the requirements of the major exporters. New program in which we're embarking on, and we hope to see a lot of activity under the supply chain financing. Accounts receivable financing. This is our export credit risk insurance program. And the idea behind this is that we will provide the exporter with a policy. The exporter ships and creates a receivable, and we're going to ensure that he gets paid. In the event he does not get paid, the exporter comes to Exim Bank and collects under his insurance policy. We take the commercial risk and the political risk, and this enables the exporter to provide terms to his buyer so that the buyer can, of course, either purchase more or find that particular purchase attractive. So we take care of the financing. We look for the exporter to take care of delivering the goods and services. And under this receivable financing, he can take this receivable into a bank and get additional financing. Okay, several policies we have across the board, but we're looking to provide policies to the exporters. We have policies for banks and we have policies for large companies, but really we're focusing here on small business policies. The newest product that we just came out with is what we call the Express Insurance. An applicant really fills out a 15-page questionnaire, and we will do the bank checking, we'll do whatever necessary, and approve transactions less than $300,000, and we will promise a 5-day turnaround time on this new insurance. So it's very designed to meet the market and give a quick response to those small business exporters who need financing for less than $300,000. Okay, buyer financing. In most cases, buyers and people that are competing on this international scene have to work with the arrangement of the OECD, Organization for Export Cooperation and Development, and most of the terms require 15% down payment, and most of the agencies will finance 85%. This is the same structure we have for our medium-term financing. The amounts are less than $10 million, and we'll finance for any tenor that's generally acceptable in the market. And that's for purchase of U.S. capital goods or large service contracts that we're working with. That's our medium-term financing. We can use that for guarantees, export credit insurance, and very few on the direct loans. We don't do many direct loans for less than $10 million. Okay, we're interested in reaching out and giving new credits to exporters. We want to enhance the small business web portal. We're looking to increase the turnaround time on approval processes and building stronger partnerships to reach more exporters. We're looking to do more in that case. We can be contacted at 800-565-3946. At the prompt, you press 2, and you will be in contact with the region that is closest to you. So we look forward to hearing from the exporters, and any questions at all, please check out our website, www.exim.gov, and special portal for small businesses. I thank you for taking your time out to listen to this presentation, and more will follow. Hector?
Good afternoon, everybody. This is Richard Ginsberg from the U.S. Small Business Administration, and I frequently work with my two esteemed partners in this webinar today, Gus Grace from Exim. We have very similar programs, and of course we have SunTrust Bank, which is our Export Lender of the Year for SBA, making the most loans to small business exporters, and we're proud to have Valerie on board. SBA is in the business of not only helping people to start and grow their businesses with 26 loan programs, most of which are in the domestic side of SBA, but we have 3 very exciting programs for international trade finance, and we're going to spend a little time on those today. But first, for all of the small businesses out there, is that it is absolutely a myth that says that small businesses don't export, when in fact 97% of all U.S. exporters are small businesses, and 70% have fewer than 20 employees. You do not have to be a mega national international company to export. You just do these export transactions one deal at a time. And as part of the National Export Initiative, we also know that of those 250,000 small business exporters, 58% are only shipping to one market. So our task in the government and with our private sector partners and multipliers is to get more small businesses to export their goods and services, and for those who are exporting to increase their markets. The 3 loan programs that we have, and while Exim is considered and is known as the official export credit agency, I usually tease Gus and say, well, SBA coming into business 60 years later in trade finance, we're the unofficial. But we do have excellent programs for the small business and the startup exporter that we're going to go through. The first program we want to talk about, as you heard from Gus, in fact is called the same thing. It's the Export Working Capital Loan. And where I've bolded on this slide, it's where the Jobs Act, the Small Business Jobs Act, signed by the President in September 2010, has significantly enhanced a number of SBA's programs, especially in the finance division. The working capital program had its loan limit increased from $2 million to $5 million. We, too, provide a 90% guarantee. This is where the 90% guarantee, I want to be clear, is a mitigation of risk on the part of the lender. The lender simply stipulates that the only way they would make a transactional loan in trade finance is if, in fact, their risk can be mitigated because of whatever the circumstances might be with the application. And it is the export insurance that Gus has alluded to previously is what mitigates your risk as the exporter. But we, too, provide that 90% guarantee. It's a full guarantee, meaning we can provide the lender a $4.5 million guarantee in case the loan does not fully succeed in being paid off. It, too, could be used for transaction financing. Most of our EWCPs are for revolving lines of credit, so that you don't have to keep going to the bank applying for another loan every time you get a transaction, a foreign transaction, and you're in the midst of shipping one, and 2 weeks later you get another contract, and this way the line of credit can solve all of your problems, at least in our case up to $5 million, for your transactions. And the quick turnaround time, our lenders are now doing all their transmissions on an electronic basis, and within, it could be anywhere from 6 minutes to 2.5 or 3 days, depending upon if the lender has delegated authority or they're one of our new trade finance lenders. That's what determines more than anything the amount of time to process the transaction. What's the eligibility? Well, first, it's that the company meets the SBA, which is generally considered throughout the U.S. government as the size standards for a small business, typically based on the North American Industrial Classification System. But all small businesses know what their NAICS codes are. They know if they're small relative to either employee size and or gross sales or net profit over a 2-year period. Where you see the comment here, no U.S. content requirement. While we too support job creation, job sustainability, and growth for our small business community, is what one particular difference is between the SBA and EXIM Export Working Capital Program is that we do not have, SBA does not have an issue in providing a loan guarantee for merchandise that is shipped that has lesser than 51% content. As a matter of fact, 70% of our small business exporters typically import something first. They do some value added to those imports, and then they reship it as an export transaction. But if somebody, if a distributor here wants to sell anything to a foreign buyer in Europe, and they can get 100% of those goods from Mexico, they can import them from Mexico, turn it around, relabel the cartons, and ship it, and that would be then considered an export, while it may have no U.S. content. Also, where it comes to the military sales, we can approve loan guarantees for sales by small business exporters to foreign military. We want our small businesses to be in business 12 months, which denotes that they have the experience and the expertise they've developed to own and operate effectively and hopefully profitably their small business. And the other eligibility provisions you see is that if you defaulted on a prior government loan, then there's very unlikely that you would be able to get another one. This is a very interesting point. We sometimes interchange the premise of supply chain businesses selling to larger U.S. companies, and they're part of that supply chain. We see that on both the domestic and international side, but specifically to international, we consider those indirect exports. A perfect example is if you manufacture some computer components that go into a cockpit of a Boeing jet, and that jet has been sold to a foreign airliner company, Japanese Airlines or whatever it may be. If you know, and the company that you're selling, for instance Boeing, that your components are being put into a new aircraft that is being shipped, your commodity is considered an indirect export, and the significance of that is that as you apply for your working capital on those components, you are eligible for export financing versus domestic financing, which in fact gives the lender a 90% guarantee versus a domestic loan guarantee of 75% with SBA. But we can do it either way, but the bank certainly would prefer a 90% guarantee than a 50 or a 75. So that's the advantage of being an indirect exporter, and that's only certified by the buyer of your finished goods. The use of proceeds, again, goods, services acquisition, accounts receivables of your foreign sales, also for standby letters of credit, the pre-shipment guarantees as well as the post-shipment guarantees. So we try to convey to our lenders that the guarantee fits virtually every description you have relative to the nature and type of transaction that you're conducting with your foreign buyer. And this final comment on the use of proceeds is if you are, especially in the services industry, if you are bidding and are a successful bidder with a prime contractor or a foreign government to perform your consulting services or whatever it may be, is that they may ask you to provide both a bid and a performance bond. The SBA has an office of surety bonds, but those fees can also be funded by the export working capital loan. And basically, it's the transaction. What signifies a transaction on the part by the lender, of course, is that the transaction is evidenced by a purchase order, a letter of credit, or some legal instruments or contract that the payment by the foreign buyer is acceptable. You see the order, cash in advance, letter of credit, open account insured, open account, no insurance. And what these simply mean is that for you, the exporter, you'd much rather tell your buyer, on this $1 million transaction, you pay me, and as soon as I get the money wired into my account, I'll ship you my stuff. Well, what do you think the buyer wants? They want to tell you, Mr. U.S. Exporter or Miss U.S. Exporter, you ship me your stuff, and when I get it, I'll wire your money. So in between are these different methods, what we call methods of payment. And again, the insurance is what protects you. The letter of credit is also a negotiable instrument that's conducted in international banking, all in the efforts to absolutely provide payment by the foreign buyer to the U.S. exporter. You don't need insurance on an open account, meaning the way I said, if the you ship and the buyer pays, and that's the open account. You typically will do that after you've had some significant long-term relationship with your foreign buyer. You get to know each other's families and so forth. It's almost personal, and you have absolute trust in each other to do a transaction on an open account basis. And as Gus mentioned, the Ex-Im Bank's export credit insurance, the premiums, they're discounted for both Ex-Im's transactions as well as SBA's small businesses relative to a 25% discount on that insurance premium. The collateral, self-liquidating loans, again, is for short term, typically 12 months or less. But as soon as the funds are wired into your account after the completion of the transaction, then that's what's paying off the loan. And you might still be working on a line of credit, but it's always being drawn down for your export needs, and it's being paid back in the short term. Our fees for this borrower as well as the lender, 0.25%. We no longer have subsidies, so basically all these fees that are levied against the small business, which is only 0.25%, and the 2 to 3.5% for loans greater than 12 months, the 55.5 basis points for the lenders is what maintains the allowance for the loan losses on the ledger. Your interest rates are negotiated between you and your banking institution. Now the International Trade Loan. This has been improved also during the Small Business Jobs Act, or from the Small Business Jobs Act. Again, its lending amount was increased to $5 million. This is a loan that is typically, it's very related to what many of you might know is the 504, the capital asset real estate loan. But the International Trade Loan, $5 million, 4.5 guarantee. This will cover expenses for land, real estate, buildings, capital equipment. They can go out from as little as 7 to up to 25 years on real estate, but it's all to enhance the capability by a growing small business that they're looking to expand their capacity, and therefore additional plant and facility may in fact be required. And here's those uses of proceeds for facilities, equipment. This is the first time under the Jobs Act that the International Trade Loan can be used for debt refinancing, and that's if the original debt would have qualified for International Trade Loan financing in the first place. And it can also be used for working capital. That means you can also use the working capital portion with the capital asset in combination. And while I've been quoted in newspapers as saying this is my favorite, all three of our credit programs are excellent, but this new puppy here, the Export Express, not that it's new, it's been with us for 12 years as a pilot program. It did take an act of Congress to make it a permanent loan program for small business exporters. The loan limit was increased from $250,000 up to $500,000 now, and banks that are currently authorized under the SBA Express program, which is several thousand, are automatically approved to process Export Express. They make their own decision. They use their own paper. This is the really fast process loan program. And it also provides now a guarantee up to $350,000, and for loans greater than $350,000, that loan will have a 75% guarantee. But wait till you see the use of proceeds. And the eligibility the same, small business, processing procedures are simple by the lender. They're all done electronically. And the proceeds are to be used to develop or expand export markets. And what exactly does that mean? Well, while it can be used for working capital for a specific transaction, as well as standby letters of credit, it can be used for any activity that you, the small business, are undertaking to either get into or expand your presence in the global marketplace. What does that mean? Well, I presume that all of you listening today and watching this presentation have a website. And I hope not to think that when you get an inquiry from somebody perhaps who's written in broken English, they are from a foreign country, you can tell that you don't delete those incoming emails because they could be the biggest sale in your company's history. But what you can use the Export Express for is you can translate your website, you can translate your publications into a language other than English. You can participate in a trade mission led by the U.S. Trade Representative or the Secretary of Commerce, where you, your marketing director, maybe your international sales director, it can get pricey. And if you're like me and other small businesses that you don't have, that money in your pockets, then if you have to go to a bank, then they can provide you the funding. You don't have a transaction. You haven't even met a prospective buyer. But if you go on a gold key trade mission with Commerce, then you might come back with 1 or 2 contracts. But to get you there, your lodging, your meals, the Export Express is the absolute perfect instrument. And lastly, here is a map of not only the country, but we denote that we have currently 19 senior international trade and finance specialists. For our lenders who are not delegated authority lenders, our people actually assist in the underwriting of the export working capital loan and the international trade loan. So they're located in 19 U.S. export assistance centers around the country, and I would certainly suggest that you contact sba.gov/international, and you'll see the directory, the names, and all the contact information for these 19 individuals around the country. And I thank you very much. And if we do this like we've done in the past, now it's my pleasure to introduce Valerie Warga, Vice President for SunTrust Bank and our Export Lender of the Year, and she is desperately looking for small businesses to make trade finance loans to. Valerie, it's all yours.
Thanks a lot, Richard. In bringing up the rear, we're SunTrust Bank, and I'm Valerie Warga, and I work in the Global Trade Solutions Division of the bank, and I'm based in Atlanta, Georgia, and that's also where SunTrust is headquartered, and we're a Southeast regional bank, and we cover the Southeast, and heavily engaged in providing export finance to small businesses. We're going to talk about global trade a little bit, some statistics, international methods of payment, other risks, and then trade finance. And I just thought I would point out some bullets of how global trade has been impactful. A lot of people may not realize my first stat that the United States is the world's largest exporter of goods and services, even though you're hearing all this talk about China and Germany. And the U.S. export of goods and services surpassed $1.83 trillion in 2008 and $1.55 trillion in 2009. And these stats came from the U.S. Department of Commerce. And like Gus had said, I think Richard has said as well, 70% or more of the businesses involved in global trade are small or medium sized. They're not the Boeings, they're not the GEs. And there's a big export market out there because 95% of the world's consumers live outside the United States. These are also Department of Commerce stats. More than 50 million American workers are employed by companies that are engaged in international trade. That's about 40% of the private sector workplace. That's Department of Treasury stat. And 97% of the 250,000 U.S. companies that export are small, medium-sized enterprises. So when you see that SME acronym, that's what that means. And it accounts for nearly a third of all the United States merchandise exports. another Department of Commerce stat. We are the United States is the world's largest manufacturer, and U.S. factories account for 21% of the world's manufacturing value added, or 60% more than China, who's the second largest manufacturer behind us. The U.S. Department of Agriculture reports that 1 in every 3 acres on American farms is planted for export markets. So I thought all of this was interesting. Going into international methods of payment, on this slide, these are the different types of payment mechanisms. And we're concerned with exporting, so take a look at the left and you'll see that in order of low to high. So the lowest risk for an exporter that's selling their goods or services is to get paid in advance. You got your cash before you have to ship, so you're safe. Then the next best thing is getting a site letter of credit or a time letter of credit. Then the next, getting into the higher risk are site collections and time collections. And then if you're selling your good or service and getting paid open account, that's your highest risk, because then you're extending credit terms and waiting to get paid. And there is a risk of non-payment because you've given credit. So in knowing all of that, what should you be scratching your head and asking yourself? Ask yourself these things. I mean, can you afford the loss if your invoice isn't paid? And most likely the answer to that is no. Will extending credit and waiting several months for payment still make your sale profitable? Could you make your sale only if you did extend credit? And then how long have your buyers been operating, and what's their credit history? Have you sold to that buyer before? And are there ways of collecting if your buyer doesn't pay? And if the shipment is made but not accepted, could you find other buyers? These are things to think about in deciding what payment method is going to be acceptable for you. And so we'll talk about these individually real quickly. Payment in advance is your least risk because you'll get paid up front before you release your good or provide your service, and you'll either get a wire transfer. I mean, that's probably the most, I see wire transfers the most because, that's instant good funds. Check, draft, or credit card would be other methods that people pay you up front, but 9 times out of 10 is wire transfers because those are good funds, and it's pretty instantaneous, whereas you're waiting for these others. Credit cards, people don't realize this, but you could get somebody that charged it, and they can charge it back, which means if they get into a dispute with you and don't like what you sold them, they could actually charge it back, and you gets into a dispute, and the credit card company finds that that you're in the wrong. They take back the money and give it back to your buyer. So it's a chargeback. The rest, I gear these for imports too, but I've got an exporting audience, I hope, and I'll move along to letters of credit. And a letter of credit is issued by a bank on behalf of its client in favor of an exporter, and it's assuring that the presentation of documents are in compliance with the letter of credit, then you should get paid. The issuing bank is substituting its own credit standing for that of whoever your buyer is, your importer. The letter of credit assures that the exporter, when the terms of the letter of credit is met, that you're going to get paid. It's eliminating commercial risk because the bank is substituting its credit standing on behalf of its client. So you don't have to worry about your buyer going bankrupt, insolvent, or protracted default, or any of that commercial risk business, because as long as the terms and conditions are met under the letter of credit, you're going to get paid. And it's the bank standing behind, and it's a bank obligation to make payment on that letter of credit. Now, if you get a confirmation on a letter of credit, what that means is you're eliminating the issuing bank risk, so it's foreign bank risk, and you're eliminating political risks to a certain extent, because the bank that's confirming the letter of credit is taking all of those risks and guaranteeing that if the terms and conditions of the letter of credit are met, you will get paid. And that's what a confirmation is, like payment insurance for a letter of credit. The exporter is not obligated to perform if the terms of the letter of credit are not acceptable. You could actually get a letter of credit, and if it's not what it is you wanted, you could actually refuse the letter of credit. So it's important for you to communicate what you want in your LC to your buyer. And just remember that letters of credit deal with documents only, and they don't remove quality or contract risk. Your contract and any quality or dispute outside of that has nothing to do with the letter of credit. Documentary collections are less secure than a letter of credit, but they're more secure than open an account. You know, the payments and all the documents flow through the banks just like they would under a letter of credit. But what I want to say here is that there's no obligation on behalf of the bank to make payment, and your buyer could, even though these documents are flowing from bank to bank, from buyer's bank to seller's bank, there is a chance that if you really don't know your buyer and they get where they don't want your decide they just didn't want your product anymore, or they're able to clear it, or they could tell their bank not to pay, and the bank's not obligated to make the payment, or they may not have the money in their account, and the bank doesn't have to pay if their customer doesn't have the money in the account, and there is a chance you possibly couldn't get paid. So collections are good. It's bank to bank, but it's good only really if you know who it is and trust who you're dealing with. Open accounts, the highest risk. Your goods are going out, and you're relying on your buyer to pay you net 30, net 60, net 90, whatever you've given them as payment terms, and you better have a good track record and a level of trust. So it's only recommended for sales to long-standing customers that have a ledger history of paying you on time and paying you, over a long period of time. Not somebody that you just know for a year. I'd say a good 2 to 3 year track record at least of paying promptly and on time. Just wanted to mention that Incoterms changed. Incoterms is they changed from 2000. They changed in 2010, and it's a set of definitions of international trade terms that was developed by the ICC, which is the International Chamber of Commerce. And what those terms do is define the trade contract responsibilities and liabilities between buyer and seller, and you and your buyer should agree upon who's going to pay cost, insurance, freight, this and that, and then that'll help you decide on your Incoterm. And we as the bank don't get involved in helping you understand which one to use. Usually your logistics and freight forwarding folks are the ones to advise you on that, or your legal consult. And more information can be found about Incoterms at that website that I've listed on the slide. The types of financing that we offer to companies who export are, we are an Ex-Im Bank working capital delegated authority lender up to $7.5 million, which means that if we decide to use the Ex-Im's working capital guarantee program, we can go up to $7.5 million on a loan amount, and we are empowered on behalf of the Export-Import Bank to approve the loan on our own. With SBA, we are a preferred lender with SBA on the Export Working Capital Program as well, up to $5 million, the max of their loans. And that's the same meaning for SBA, is that we're a preferred lender, means that we can act on behalf of SBA to approve your loans on our own. We lend against insured foreign receivables. So when you heard Gus and Richard talking about export credit insurance, we will look at lending against your exports, your foreign receivables that are insured. So that's insured foreign receivables financing. Now, that only works, you don't have AR unless you're selling open account, so it only works post-export. So you're selling a lot on open account, and you do have concerns or concentrations or large dollar amounts out to companies that are buying from you, and you are concerned about those concentrations or those large dollar amounts, you should think about export credit insurance because it protects you against commercial and political risks of non-payment, and then the bank can also looking at lending against that as collateral. So it works for both the bank and for you. Foreign buyer term financing is talking about where we would utilize XM's medium-term program, their guarantee or their insurance, to look at financing the sale of capital goods to foreign buyers of yours, where we actually would directly look at financing the foreign buyer, your buyer, under their medium-term or guarantee or insurance program, and the bank takes you out of it, and the loan is between us and your buyer. We are also, by virtue of the fact that we're a preferred SBA lender, we do SBA Export Express loans, which you heard Richard discuss, and a very excellent product. It's streamlined for the bank and it's streamlined for you. We go up to $500,000 on that product, and you saw all the eligibility of how it can be used. It's very flexible. It is an express product. Turnaround is very quick, and we can go up to $500,000, and that seems to fit a lot of business needs. In a nutshell, this is what we offer on the export trade finance side, and that's wrapping it up.
Thank you very much, Valerie. Victor, are you on the line?
Yes, sir.
All right. Can you start hosting us for the Q&A portion?
Of course. We will now begin the question and answer session. To ask a question, please press *1 on your touchtone phone and record your name at the prompt. Your name is required to introduce your question. To withdraw your request, you may press *2. One moment, please, while we wait for questions. Once again, that's *1 to ask a question, *2 to withdraw your question. Okay, we have a few questions in queue. Our first question comes from Ed. Your line is open.
Yes, my question is in regards to the ExportImport Bank speaker. You mentioned about direct loans. What kind of direct loans do you provide, and is this different from a loan guarantee program?
This is Gus Grace at Exim Bank. A direct loan with ExportImport Bank means simply we would go to Treasury, take out the funds, book the loan, let the buyer sign the promissory note, and the proceeds of that loan goes, of course, to the exporter. In a guarantee, we don't fund the loan. We provide a guarantee to the bank. The bank uses their funds, booking the loan, getting a promissory note from the buyer. The proceeds of the bank's loan goes to the exporter. They're still required a 15% down payment, and we finance or lend directly the 85% portion. This was more necessary when banks had a liquidity problem, and in fact they weren't willing to do a lot of direct loans. We stepped up to the plate, and we were able to do probably close to $3 billion in direct loans this past year. We would prefer to keep the banks in the business of lending. We provide the guarantee to the banks. The banks have the opportunity to do a down payment portion and also work with a lot of the letter credit and a lot of the other services that Valerie talked about that SunTrust is able to do.
Thank you.
Our next question comes from Betty Liu. Your line is open.
Oh, hi. My question is regarding the Export Express loan. We are just starting to do the exporting, but the eligibility is that require to have at least 12 months in the exporting business. But the slide, I think the second, Richard mentioned that even, this can be for just a starting company, starting the exporting, even we never have any transactions yet.
Well, you can. Hi, Betty. This is Betty Lou. This is Richard Ginsberg, and the 12-month requirement for being in business is just to demonstrate, not to the SBA as much as to the lender, that you've got the business acumen, the business savvy, that you've been doing some domestic business, you've been making sales versus just being a startup company. But the 12-month, what we show as a prerequisite is there's always exceptions. Most notably, those exceptions come from the indigenous people from foreign countries that have been naturalized here in the United States, and they've got significant connections back in the home country for people who want to buy U.S. goods and or services to distribute back in the home country. So that would preclude, in most cases, the 12-month as far as exporting criteria, but you still have to have a full knowledge. You still have to convince people that you're operating your business in a good way, a profitable way, an efficient way. Because let's understand that international transactions are considerably different than selling to a business that's across town or across country here in the United States.
Okay.
I hope that helped.
Yeah. Okay. If I understand you correctly, we can still apply.
Sure.
Okay.
I mean, if you want, are you in business today?
Yes.
Okay. So if you're doing commerce today, if you're doing business, and you want to, again, do you have a website?
Yes.
Okay. So if you want to translate that into other languages, if you've got written material or print media that you want to translate, or you want to go on some visit to a foreign country to determine with commerce that there's demand for your goods or services, then anything that costs you money or has a price tag on your export activities can be funded by lenders under the Export Express program.
Okay. All right. Thank you very much.
You're very welcome.
Our next question comes from Joseph Needon. Your line is open. Joseph, your line is open.
Yeah, my question is, if you are new to the exporting business, what is the requirement for someone to get a line of credit or a loan to start the exporting, and what requirements do someone need?
Well, I can help. This is Richard again, and I think Gus and I, we've done enough of these together. Let's understand that the government guarantee is where the government is assuming the risk that you, the borrower, are going to pay the loan back. So while I hate to say that it's not a social or giveaway program, all applications for loans from banks, the borrower has to meet certain credit standards and show certain capabilities that they can pay the loan back. So that being said, whether you're a startup business at all, just starting out in business, or you've been in business and because you paid attention and with 2/3 of the world's purchasing power outside the U.S., you really want to start exporting. Then, relative to lines of credit, these are going to be determined when you start getting your transactions. You get a legitimate contract from a foreign buyer, and you take that contract into your bank, or you can sit down with any member of Commerce or SBA or XM in a U.S. Export Assistance Center, and they can sit down and work out what we call structured financing. And this is where they explain to you all the things that you need to be aware of. And all of us, of course, including you, are interested in making the sale and delivering the goods and then getting paid. So there's a large number of people across the country from wherever you are that want to help you make that transaction. But for borrowing, you have to qualify. You have to qualify by, prudent lending standards.
Thank you.
You're welcome.
We have no further questions at this time, sir.
All right, Victor. At this time, I have a question here for Valerie that came through the text. And the question is from Mr. Arthur Pham. The question is, if I engage into an export transaction but don't have an account with SunTrust yet, should the letter of credit from the buyer be issued to my BOA, which I assume is Bank of America account, and still be able to request an express SBA line of credit with SunTrust?
It sounds like he's mincing terms to get mixing how he's getting paid with the fact that he needs financing. So it sounds like he's getting paid with a letter of credit, but he's wondering and it's going to Bank of America maybe, and he doesn't bank with us, and would he qualify for a line of credit? Did he leave? Is there a way for me to contact? I need to make sure he's in my footprint for starters, like that his business is located in my coverage area, the southeastern United States.
Yeah.
For starters.
If Arthur would like to ask a question verbally, Victor, why don't you repeat the instructions again?
Okay, sir. To ask a question, please press *1 on your touchtone phone and record your name at the prompt. And again, your name is required to introduce your question. We have two questions on the line. Okay, here we have Arthur Pham on the line. Your line is open.
Valerie, my question was, I have done some export transaction in the past, but then we was engaged into a smaller transaction, and all of a sudden, if we receive a large amount, say $500,000 letter of credit for a transaction, and we need funding, should we go ahead and take the letter of credit and then apply for express loans with SunTrust Bank?
You're getting paid under a letter of credit, but you need some financing as well?
Yes.
And where's your business located, Arthur?
My business is located in Irving, Texas, and my market is normally to Vietnam and Thailand.
Yeah. That was one of my first questions from your text message to Hector, is that I don't surface Texas. I'm a southeastern. We're a regional bank, and my territory doesn't go any further than Alabama, that far west. So I can't help you from here. We don't service Texas.
Maybe I can jump in here. Right in Irving, and actually in Grapevine, is the U.S. Export Assistance Center. And I think Ex-Im Bank has a representative there, but certainly SBA and the Department of Commerce are there in the U.S. Export Assistance Center in Grapevine, Texas, which is just around the corner a piece.
Okay, Ex-Im Bank would be in Dallas and also Houston.
Right. Dallas, yeah, that's right. Dallas they're close by.
And Arthur, if we could service you, the way we would handle it would be that we would want that letter of credit coming to SunTrust, which is our assurance of repayment. And so that would...
The problem that I had in the past was I got promised by Bank of America, JP Morgan, that they will process these loans with the SBA program and the Import-Export Bank. I have worked with Ex-Im officer in the past, and last year we received a letter of credit to purchase some U.S. agricultural goods, and somehow when we get the letter of credit, we got rejected for a line of credit to complete the transaction. And so we have to reject the letter of credit and apologize to the buyers. I had two banks, actually three banks, and one of that was a bank in California called East West Bank. They said, yeah, just take the letter of credit. We're going to approve a line of credit for you immediately. And I found it the hard way that is doesn't seem to be that way. And
doesn't work that way because we're still looking at the creditworthiness of you, the borrower, to repay the loan, and there's performance risk because it's, even if you do have a letter of credit and you present documents that are not in compliance with the letter of credit, there is performance risk that something could go wrong and you don't get paid, and then you're not able to repay the loan. So the banks are going to be looking at the overall creditworthiness of you, the borrower, and then the letter of credit would be a form of assurance of a repayment to you, but it's not a guarantee of payment. And that they should be looking. We would definitely look at an SBA or an Ex-Im Bank working capital line, and then seeing if we could underwrite your creditworthiness. And so that might be what's coming into play. I don't know. I don't want to tie everybody else up on that, but it's just taking the letter of credit anywhere, and it's not a guarantee you're going to get a line of credit because they're still going to underwrite you, the company, and your ability to repay and all the, us SunTrust, if it was us looking at it, we're still going to evaluate your coverage ratios, your debt service coverage, your ability to repay the loan, and then what is our collateral, and then that personal and business credit is all clean, and all those sorts of things that go into making a credit decision. And
yeah, I would agree that the letter of credit is a contingent liability, and only if you can perform will we have a viable transaction. So we need to look at everything.
Understood. The problem is the underwriting process would take longer than the expiry of the letter of credit, and so we have to reject it because sometimes bank would take about 30 days for the underwriting process. And a normal export transaction or a commercial letter of credit is only have a life of 30 days, up to 60 days. And therefore, by applying for an SBA loans, we don't have enough time to complete that transaction.
Yeah, the only thing I can say there is, this is Valerie, author, is to try to time your negotiation of your deal, and have the bank be looking at your financial package ahead of the curve in anticipation, and not wait till you have the purchase. We could not at the moment that you enter into a purchase, get a purchase order from somebody, tell them it's contingent. Put some sort of contingency in there for yourself so that you don't embarrass yourself in assuming the bank's going to just immediately grant credit quickly. Maybe try to buy yourself some time and put a contingency in the purchase order, and then in knowing that you've got a bona fide signed purchase order from somebody saying that it's going to be backed by a letter of credit, knowing what bank it's coming from and knowing how much money it's going to be, and then telling the bank, would you give me a loan? It's not always going to be for the full amount of the letter of credit. We typically will not advance more than 80% of the value of the letter of credit or your contract. I mean, giving the bank enough lead time.
All right, Mr. Pham, I also have your contact information on the registration list. What I'll do is I'll follow up with both Mr. Grace and Mr. Ginsberg after the fact to see if we can link you up with a contact down in Texas so that you can follow up and perhaps start the process anew in anticipation of a future transaction.
Thank you so much.
All right, Victor, do we have any other questions?
Yes, sir. Our last question comes from Gary Winget. Your line is open.
My question is, working with a small town bank, they're SBA, but for one reason or they won't look at an export type loan or guarantee. What are my options?
Well, I think what you've met is one of those smaller community banks that, like so many small businesses, don't know what international is and what global business is. There's a lot of lenders out there, unfortunately, where businesses are located, where our small business owners live, that just don't do trade finance because they don't have the expertise amongst their credit officers and their lending officers. So, again, I would suggest that where SBA is concerned is that on our website, sba.gov /international, is that we have a listing of all of our lenders that do trade finance on a state-by-state basis.
Okay.
So just because your particular depository institution, they might be handling all of your domestic, and you might want to check with them as well to see if they're an SBA partner, because we can train them to become trade finance lenders. But if they're already a partner with SBA on the domestic side, a lot of our small businesses do get loans, domestic type loans, that do support their export activities. But so you might want to check with your lender to see if they do domestic, but and if they're an express lender, they can do an export express and not have to be specifically an international trade lending institution.
This is Gus Grace with ExportImport Bank. On our website, www.exim.gov, there is a drop-down menu that talks about partners. If you click on partners and click on delegated authority working capital lenders, you can pull up a lender in your state and choose one that has, very much like SunTrust, that already has delegated authority. They're sure to entertain the transaction if you need working capital. There's another partner list that we have, and those are brokers. You can also check with brokers in your state, because you might very well get away with short-term financing and you need export credit insurance. So check the broker list in your state and the delegated authority lender list in your state.
Thank you.
Our next question. Oh, sorry, would you like me to introduce the last question, or would you folks like to?
Actually, go ahead and introduce it, yes. And I have one more question that came in through the text.
All right. Our following question comes from Syed Hussein. Your line is open. Syed, you have an open line. Sir, if your line is muted, please unmute your line and introduce your question.
Oh, I'm sorry. How to validate a foreign company?
I'm sorry, I didn't understand that.
I said, when I deal with foreign companies outside U.S., how to validate that they are like genuine companies, because there are so many websites.
Oh, well, I think I can take a quick stab at answering that, because I don't think that's for the speakers. But as through the U.S. Commercial Service, sir, we have a program called an International Company Profile that we can just do that due diligence to make sure that you are entering or into business with a legitimate business entity in whatever country the transaction will take place. Okay. So you can call us here at the Trade Information Center as a first step, and we can go through the process of connecting you with a U.S. Export Assistance Center, which will in turn start the process with the U.S. Commercial Service post in the country of your destination.
Okay. What's the number I should call?
The number is 1-800-872-8723.
And one more question, that if the seller is in India and buyer is in Pakistan, and I'm trading between these two, is it considered under export or no?
No, that would not constitute an export from the United States.
Okay.
Typically although the Small Business Administration, it has to flow from the United States. And Richard, you correct me if I'm wrong, but the Small Business Administration does not have the 51% content.
That's correct, but the export must be shipped from the U.S. In my example of somebody selling chairs manufactured in Mexico and shipping them to Asia, those chairs have to come into the U.S. and the U.S. company has to take ownership.
Okay.
And then they can forward just turn them around and ship them out of the U.S. But the U.S. firm must take constructive receipt or ownership of those goods or any part of those goods to then be considered an exporter. Otherwise, you're just facilitating a transaction.
Nice. And still the country of origin will be, in your case, Mexico or USA?
In that case, it would be Mexico.
Correct. Okay. Thank you.
All right. I have a question here that came through the text, and is assuming it's from Kalechi Nawova. Is assuming your supplier is a business based in the UK, and the supplier wishes to provide supplier credit of 50%, can the SBA provide cover for 20% being part requirement of our contribution of 40%? Goods are to be exported to a third country.
So let me see if I understand this. A U.S. company is importing from the UK?
Apparently, yeah. Apparently, let's say the manufacturer is based in the UK.
Okay.
And they will finance 50% of the transaction. The U.S. exporter is responsible for 40%, and they're looking for an SBA instrument to cover at least 20% of their contribution.
Well, I don't know if I mentioned it during my presentation, but 75% of small business exporters do import. If they're doing value added and if they're taking constructive receipt of these goods, and let's not discuss the terms yet, because again, those terms are determined through negotiations between the manufacturer and maybe this U.S. Either a reseller, they're doing value added. I don't know exactly what they're doing with the manufactured goods coming from the UK. But if they're turning around and taking any of those goods that he's importing and shipping them out, then the SBA can still provide whatever, through guarantees, the working capital. Now, here's the irony. The irony is that with an import, because we support the development, the growth, and success of small businesses, that also includes importers. Now, the government, we're stressing exports. That's where perhaps more jobs are created, sustainability and longevity in business is sustained or is a given. But working capital, we have working capital on the domestic side. So our domestic loan programs can cover imports.
All right. Victor, do we have any other calls in queue?
We have one from Syed Hussein. Line is open. Syed, your line is open.
I import from India into USA. Hello?
Yes. Hello? Are you there, Syed?
And that person goes.
Yes. Hello?
Hello?
Are you listening to me?
I hear you. I think we all hear you.
Okay. All right. Thank you. Suppose I import from India, then I have to pay custom and then export to Pakistan. Then do I get this custom charges back?
No. Whatever your costs are to bring the goods in from India is between you and your seller.
That I understand, but I have to pay the custom.
To get into the United States.
Fee.
That's correct.
And then when I reship it outside, when I export it, that custom duty will be repaid to me or what?
No, those are separate transactions.
I see. Okay.
But I think a good idea is, there's something out there called the freight forwarder.
Mm-hmm.
And freight forwarders, they are so well versed, more than any of us are, I'm sure, about, all the rules of customs, the value-added taxes, and all those things. And I'm sure that they can explain both from the importer perspective as well as the exporter.
Okay.
Okay?
Thank you.
You're welcome.
All right, Victor, anything else on cue?
No, sir.
All right, well, great. First of all, I want to thank all the participants on the webinar. I hope that this was useful information, and also want to thank our speakers for their time and the great information they were able to share with us. I want to remind everyone that we are going to send a copy of the presentation and a link of the replay of this webinar via email over the next couple of days, so be out on the lookout for that. And also, lastly, on behalf of the U.S. Department of Commerce, I want to thank everyone for their participation and remind everyone that if they have any questions about exporting, they can reach us at the Trade Information Center. Our phone number is 1-800-USA-TRADE, or by the numbers 1-800-872-8723. With that, I will close the webinar, and thanks to everyone again.
Thank you, as always. Thank you. It's been great. Thank you.
Thank you, Gus. Thank you, Valerie. Talk to you soon.
All righty.
Bye-bye.
Thank you for your participation in today's call. You may now disconnect.